Hi, hello, welcome. Good morning, good day, wherever you are. Welcome to our global webinar. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. This is real-time daily trading ideas. Welcome to Admiral Markets. We will start like every day with disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you are a starter, please start with a demo account to make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our webpage. There will find also the key information documents, the kits, and everything will be there on our web pages like admiralmarkets.com. This is our scheme. On Monday, it's Jay's day. On Tuesday, like today, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And on Friday, it's DAX day. Our leading day traders live every business day to the same time. This is me. My name is Jens. I'm the introducer only, so my English is made in Germany. I'm talking from the Berlin office. I'm not the main speaker. The main speaker is the day trader of the day. Today, it will be Paul. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. In July, we will party and celebrate the DAX anniversary. Why? Because the DAX had birthday or anniversary. It's now 30 years old. That's why we have a better spread like usual, 0.5 points to the main trading hours only, but all the other time already a great spread of just 0.8 points. Even the usual spread should be one of the best offers for DAX 30 traders. All the other like euro dollar typical spread of just 0.8 pips also, check them out on admiralmarkets.com. And of course, they will find also information about the upcoming big change for all CFD and Forex traders in the European Union. From 30th of July, only the professional clients can get a high leverage up to 500, and the retail clients, what will be the default, get a leverage up to 30 or 20, depends on the instruments you are trading. If you are active professional client, check out if you like to get the professional client status. There will be some differences. You will see it here displayed, and all the details and how you can apply to get professional client status on our webpage. Here you see the direct link. And if you'd like to speak with us about that or any other topic, you can call us, you can send us an email, and also the other channels like YouTube and Facebook, everything, of course, linked from admiralmarkets.com. And on admiralmarkets.com, you'll find also something about our regulatory background. And now it's enough time for my side. Now it's time for Paul. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, everybody. I hope you can hear my voice. I hope you can see my screens now. Thanks for the introduction, Jens. So here we are. Tuesday, 17th of July, and we've had after last week's shenanigans in the UK. Well, we've had a little bit of a continuation with that, with some of the sort of Brexit politicking that we saw yesterday, and with sort of the votes that with one of the bills through last night that was just provide a little bit of theatre, a little bit of volatility in terms of how people were viewing sterling and FTSE, and I'm going to come to that in a little bit, and we'll have a little look at the sort of sterling and FTSE itself, and of course, as always, I'll try and sort of fit in a couple of questions, time permitting. But what I thought to start today with is just we'll start with the usual. If we're trading FX, we've got to start with the dollar index. Okay, we always need to know what the story is. So for those of you who are joining us for the first time, I know there's new traders who join us. My charts are pretty simple. I have a blue 20 period simple moving average, a red 50 simple moving average, and a green 200 simple moving average. Sort of green bullish, red bearish candles, and then you can see that I will draw in levels of horizontal levels of support and resistance, and also the odd trend line or pattern as I see fit. So what we talk about, big picture. This is the dollar index, the weekly chart. We can see that those of you who've been joining me for the last couple of months, we've been talking about this 95 level. We can see there on the weekly chart that actually we've had lots of wicks up there. There's a sort of a level of resistance there. The weekly 200 period moving average is there. And even though we've had dollar strength and the dollar is the top dog, it's not an unsurprise that after this great run up that there's perhaps maybe a little bit of profit taking going on as we run into the sort of cooler summer months, cooler in terms of trading trading action that we're looking at that. I've said for quite a while that actually I thought that we may see a little bit of profit taking. Price could drift back down towards that zone before moving up as we go on to the year. That would give us an inverse head and shoulders. So if those of you who joined me last week, if I go down to the daily chart now, okay, here we go. A daily chart, this was looking last week when we talked about it, how it was acting almost like a sort of triple top there. Okay, we had a nice sort of let's put the cursor on. We had a nice engulfing candle here. Okay, all right, which was also a bit of a key reversal candle. We also had finished with sort of an evening star formation, and so we were looking to sort of have a short position there. Okay, which took a little while to sort of trigger, which short about 94.75, stops above those recent highs. We can see that's triggered, and it's a little bit in profit. That's it's always nice, but the market does what it wants to do. So what I'm looking at is having seen that from Friday, that's just almost like a rounding top formation that we're getting in place there. Okay, it's now sort of creating a lower high as well. So of course all of that gives me good support in terms of that sort of short, some profit taking on the dollars, and then of course what I'll be doing is I'll be watching to see how price now reacts to that daily 50 period moving average. We can see last time it got down there, it actually acted as dynamic support and price bounced, and I'm going to be looking to see will it slice through there, which gives me a lot of confidence, or will it actually bounce a little bit and then maybe get into a little bit of a squeeze between the 20 and the 50. Okay, and that's no bad thing either. It's a case of sort of trap traders, squeeze traders been going on, and then before it rolls over. And so of course that if we're looking at maybe some dollar weakness, okay, sort of short-term dollar weakness, well that can of course drive the way we look to trade other elements. So if you're in that trade, my suggestion is you stay with it, but we just look at how the how it price reacts to that daily 50 over the next couple of days. So I've also got before we put up a couple of other trades. I've got, as always, those of you who might join me for a while, I try to put up a couple of trade ideas for you every week, but I also will give you a little bit of sometimes we'll have a little look at something that I might call like a watch and shoot, all right? Namely that it's something that's setting up, okay? There's not a trade right there moment, but it's setting up, and for the rest of the week, it's worth watching to see how that might particularly play out, and I particularly see that at the DAX at the moment, okay? Let's bring it up. I know the DAX is a very, very, very popular trading instrument here with Admiral clients. Let's bring this up, okay? And on the weekly chart here, okay, so there's not really anything there terribly exciting to me at this moment, okay? No, nothing there. But when I go down to the daily, well, I saw we talked about how we had a little bit of a nice bit of a long shunt. Okay, sort of and a move up there. It's when I get down to the 4-hourly chart that I start to give some consideration to a bit of adding it to my watch list. All right, so here we go. Here's the 4-hour chart. 4-hour chart. We had we talked about this a couple of weeks back. We had a really very nice inverse head and shoulders sort of setting up there, right? And price rallied quite nicely from there. Hopefully you can see that price rallied all the way up there from down towards around a kind of about 12,200. Let's get the cursor around down for around about sort of 12,200. We were talking about, it rallied all the way up to around about 12,600. Okay, so it was a nice rally. But what I'm curious about now is, look at what price action is doing at the moment. We've got the green 200 period moving average above, the red 50 beneath. Okay, the green 200 is acting as dynamic resistance. The sort of red 50 is acting as dynamic support. So I see that as price is getting squeezed. Okay, price is getting squeezed. And I'm just looking at that, just the way that price is just getting into a smaller and smaller sort of triangle wedge. Okay, it's price. It's like anything. It's price is coiling up, getting ready to burst. So do I know which way it's going to burst? Well, if I'm honest, I don't. If I was at to call, I might say, I'd probably maybe sort of expect maybe a little bit of a move to the north side. Okay, but reality is when you see a wedge like this, what I tend to like to do is to see actually price, make its play. Think of it, the market let it play its hand. So ideally, what I'd like to see is maybe if it's going to go north, a break and then a hold above that trend line, that daily, at a 4 hourly, sorry, 200 period moving average, get above there and hold, okay, maybe come back, test it before it moved north. Alternatively, if it sort of drops south, okay, then, I want to see it holding beneath that 50 period moving average, beneath that sort of trend line there, holding beneath there, maybe using it, turning it into dynamic resistance before it moves down. So this is a case of, a watch and shoot trade, ladies and gentlemen. Put it on your watch list, keep an eye on that. I think it'll be, I think there's clearly getting ready something to make its next move, and we shall wait to see what that brings us. I think it could be a nice little final move before everybody goes on holiday. With that in mind, I just wanted to, we've talked a little bit about, here we go, a little bit about oil here, okay? And just want to give it a little bit of sort of insight, okay? So this is the monthly chart on oil, all right? I see that once again, that was a bit of an inverse head and shoulders that we've talked about quite a lot earlier on in the year, and it's actually been, it was a great move, okay? You look at that, it was a great move there, okay, on oil, all right? Some really super strong moves, and we've been up to that area, and the thing that started to get me maybe thinking that the party was over is that look at this candle from June, okay, here we've had this is a really big engulfing candle, there, okay. It's completely, and it's very strong, it's a very bullish candle, very bullish close. Now lots of people might get excited about that, but I perhaps get excited about it for different reasons. You see, that is a big bullish engulfing candle. And the thing is, I want to see a bullish engulfing candle happen at the end of a downtrend, not really after a strong uptrend. If it had happened here, let's say, it had happened here as part of let's say, of a double bottom there around about the 33 level, and it would give me a big bullish engulfing candle there, I'd be excited. I'd be all over that like a cheap suit, looking to get my trade on. But when I see this at the end after a long, strong uptrend, I actually have the opposite idea. I start to think that, what, Paul, the party's coming to an end. All right, these are the people who are last to the party now. I'm sure you, the listeners like myself, you've all been to parties in your life. You know that, the rules. You never want to be the first person to a party, but also you never want to be the last person to a party. Okay, there's a sweet spot at turning up to a party, and the same as there's a sweet spot turning up to the markets. So when I see this, this strikes me as sort of kind of last people turning up to the party, and so I start to get a little bit sort of considering, well, maybe it might be time to sort of if you're long, start to take some profits, but also maybe, just get to see if there's an opportunity on the other side. And that's what we've seen. A couple of weeks ago, we talked about, this sort of big key reversal weekly on oil, but it actually, it pushed through that. And then we talked about, well, actually, maybe it's setting up there as it's a bit of an evening star formation. And when I go down to the sort of the daily chart there, the sort of the levels of resistance we saw there up around about 75, okay, just started to, it was a bit scrappy, but we've seen a nice sell off there, okay, over the last few days. The 4-hour chart's even nice. We got up, we put in another big sort of key reversal, high wave candle, really clearing out lots of orders around that. So 74.80 towards 75, and you can see that has just rolled over and drifted away. And so I would be looking at, as a longer term thing, I'd probably be a little bit bearish on oil now. So there's a little bit of a roundup. Why don't we have a little look at a couple of trade opportunities there? Okay, so I'm going to switch across to my British pound profile. Just hopefully that'll launch ourselves up here. Okay, so if you're new, all right, what I have is I have a profile for pretty much all of the major currencies. This is my British pound one. So I have I have euro sterling, pound against dollar, pound against yen, pound against Swiss franc, pound against Aussie, pound against Kiwi, okay, pound against CAD, and the FTSE as well, the UK index. So why don't we have a look at the FTSE index, okay, to begin with, right? So if I look at this in the daily chart, what I look at there is, when I see that, if I just put a little bit of a rectangle around here, I look at that, having hit those kind of having hit those those highs earlier in the year, what I see there is, it's just an element of, it's just been in a kind of a little bit of a block there, a little bit of a range block there, hasn't it, for for 2 months or so, hasn't it? And I think part of that is to do with we had a bit of a we've had sort of the sterling weakness fell away a little bit during that time. We all, and despite that, we still didn't see we still didn't sort of see big push-ups in FTSE. But what we also have seen is, of course, is the Brexit shenanigans that's going on with Theresa May, and of course that gives us uncertainty, and markets hate uncertainty. And so what we've seen there is an element of is just an element of the FTSE really just going sideways for sort of 2 months. But that that can provide range traders with an opportunity. So if I just go down to the 4-hour chart here, okay, what I'm kind of particularly interested in here is look at this on the 4-hour chart. Okay, we can see that a few of these levels here. Okay, we can see that 7600 has been of an interesting level, and up to around about 7700. Okay, and we've seen that for about the last month. Okay, it's whenever it's got even down there a strong bit, it's come back up above it, and I see that we're in that block 7600 to 7700, and and not surprisingly we've been back down there here again in the sort of this week. All right, so let's go down. Let's see if there's a trade opportunity here, and and here's where this morning we sort of had a bit of a short trade to take off. Price came back down to that 7600 area, put in this big engulfing candle on the 1-hour chart. All right, engulfing candle on the 1-hour chart. So I had a long trade there off it. Okay, so I was long at around about 7603, stop loss at 7585. So that's about 18 ticks of trade risk, with a target up there around about 7664. Okay, which is about, you're risking about 18 ticks for 61, so it gives you about 3.3 R. Those of you who are greed-based traders might think, well, actually, if it goes long, it could get up to the 7700 level, which would be a nice, you're getting there a sort of a trade reward to risk for about 5 to 1 there. But I just keep an eye on that, watch that. I think we're just going to be knocking about in a bit of a range there. I think the only thing that might change that is if Theresa May gets booted out of her office, but she has just tabling a bill to bring forward the summer holidays for MPs by 5 days. So I suspect she's doing that to hopefully save her neck, and everyone goes away for the summer and thinks about what's going to happen. So we'll just keep an eye on that. It'll be interesting couple of days. I thought I'd also have a little look at, for a little final sort of trade opportunity for you, pound against New Zealand dollar. So we had, pound was strong. Here's the weekly chart. Pound was strong, okay, but here we are battering up against that weekly 200. But then invariably we had a little bit of a fall away there, a lot of profit taking off sterling, and then also we had was comdols, all right, the commodity dollar currencies. Remember a few weeks ago I talked about China. We had a little look at the Chinese indices and how they were not looking terribly healthy, and of course the knock-on impact on that was the commodity dollar currencies, the Canadian dollar, the Aussie dollar, the Kiwi dollar. And for the last few months, if you looked at a kind of a strength weakness matrix, the commodity dollar currencies were at the bottom of the pile, and presently Kiwi dollar is at the bottom. So we've seen over the last week sterling has it's trudged its way, clawed its way up the strength matrix, whilst Kiwi dollar has fallen down the matrix. So what we saw this morning that was of interest was, we had a bit of you can see there we had a little bit of a drop off there in sterling. Okay, so a lot of that was probably just due to some of the comments from Carney, some of the news this morning. But we're still thinking that this is perhaps a little bit overdone in a way, a little bit overdone. It's an opportunity for us to basically have a sort of a short-term trade there to just give us an opportunity there, right? We want to be virus sterling, okay, seller Kiwi dollar. So we're just looking at that sort of high wave candle we have there. We've pushed up there, we've moved down there, okay. It's I'd like to have seen a bit of a stronger close, okay, but what I'd be looking at is a kind of a long trade there, okay. If it bounces around about 193.91, stop loss around about 193.57. So we'll be looking here about about 93.91, 93.92, okay, with a stop loss just beneath that low about 93.57. Be targeting back up here towards there around about that kind of 195.23 area there, okay. So you're going to risk about 34 ticks for 130 ticks of profits, which is about 3.6 to 3.8 are of reward to risk. So as I said, I think that's just a bit of a knee-jerk reaction there this morning. We still have Kiwi dollar very, very weak, right? And maybe we see a little bit of strength there. So a little bit of a quick flash through there for us, Jens. If there's any questions for the last moment or two, I'll happily take them. See if I can help the traders if we've got time, Jens.
No, but let's take a look also to some other markets, like is the wish from the participants. What about Bitcoin? Still a hot topic. Let's take a short look to BTC USD, please.
All right, let's have a look at that. Okay, so we'll have it here on the it's provided on the Admiral MetaTrader 4 Supreme Edition. Let's bring it up. Okay, let's have a quick look at this. Let's have a look. It's been an interesting one, hasn't it, for traders? Okay, after the after the sort of euphoria of last year, this year has been a very different picture, hasn't it? But ultimately we're traders, all right. You trade what you see. If I talk about you becoming a versatile trader, the ability to trade any instrument in any direction at any time frame. At the moment, I see that as we're still in. I still see that as that's not a very great trend line, but it's just to give you an idea that I still see as that we are in an area of of a downtrend. Okay, we're down towards we've sort of reached the sort of kind of back towards the sort of lows of earlier this year here around about the 58.10. Okay, 58.10 level. I noticed that we've just nudged ourselves off that at the moment. But what I'd be looking at is are we getting in a little bit of a little bit of contraction, a little bit of squeeze there? Okay, what I'll be we've got the daily 50 there. They've got that sort of trend line there. Okay, just the sort of the bigger trend line above. And what I'm looking at is is this a descending triangle that's forming? Okay, is this a really big descending triangle that's forming? In which case, what do I need to see happen? Well, what I need to see happen is I need to see us get beneath, okay, beneath that 50, but beneath this level here, okay, 57.30. I need us to get get down beneath that, okay, beneath that and hold beneath it, okay, on a daily and then weekly basis for me to convince me that we're going short. Or alternative, if we get a break above it, up to above around about 7,000, then I'd be looking at us moving up towards those recent highs around about 9 to 9,600 there, okay. So hopefully that's a little bit of quick. I know we're short of time, but there's a little bit of a very quick look at Bitcoin there for you, Jens.
Thanks for today. Tomorrow is another day. Tomorrow we have a new day trader. It's 5 days a week, 5 different traders. So hope to see you all again. And if you'd like to see that, what Paul said today, again, a couple of hours later, it will be available on our YouTube channel. Thanks. Greetings from Berlin office and hope to see you tomorrow again. Bye-bye.